Hello and welcome everybody to the open bar. Something we do here every Tuesday morning, probably around 10 o'clock. I like this 10 o'clock time. Gives us a half hour for the market to kind of settle. I can't come on, during that first half hour. A lot of stuff is moving. Fast market these days. How is everybody doing? Again, happy Tuesday. Happy big tech earnings season. Probably my favorite part of earnings season. Look, I have a soft spot for the banks. I do. The kickoff earnings season. It's a special time. It's a magical week. It usually begins at the end of the week, right? With JP Morgan. Where's my JP Morgan hat? I don't have it. But really big tech is what drives the market, right? So this is the beginning of all the big news for the quarter. And what a setup we have. I haven't seen such a sweet setup for the biggest, best companies and stocks in the world in at least 4 or 5 quarters. We're doing a lot of beat report research about this, about the way that reactions have kind of changed. If you look at, the fundamentals for these Mag 7 companies, it's beat, double beat, double beat, double beat, double beat every quarter. It's just how it goes. They almost always double beat. In fact, we looked back at the names. I would love to throw up that table. Just got sent to Beat Report members. Beat Report members, stop everything that you're doing. Go open your inbox. We just sent out a trade that I think is going to be an absolute doozy, like a real banger. I think this has true multi-bagger status. Trading a big name here, a big earnings trade. And anyway, we went through them and we did the analysis. We looked at Microsoft, Meta, and Apple, the 3 big boys that report this week. Did I get filled? Yeah. And over the last 8 quarters, Microsoft, Apple, double beats every quarter, 8 for 8. And then Meta, 7 out of 8. They missed on the bottom. I think the most recent quarter, the stock got absolutely killed for it. So the fundamentals haven't changed. The performance hasn't changed. These guys come out, they crush earnings, right? They still find a way to surprise the market, right? And beat in a big way. Just keep driving, 20, 30% revenue growth to the bottom line, better and better. It's just incredible the way these businesses are built. They're special, okay? That hasn't changed. What has changed since, I would say, last summer is the way that the market rewards them, or doesn't, for these reports, for these big news events, right? Earnings 4 times a year, the biggest catalyst to move whatever stock you're talking about, right, or investing in. You have 4 times a year that you should expect outsized moves, right? And what we know about these earnings reactions is that they tend to occur in the direction of the underlying trend. A lot of times that's the intermediate term trend, okay? Right, because you get a little dip into earnings, right? A little pre-earnings drift lower. Do you have a short-term trend that's actually lower? You want to zoom out a little bit and say, okay, has this stock been making higher highs and higher lows going back a couple quarters, right? If the answer is yes, the underlying intermediate trend is higher, you should expect the earnings reaction to also be higher, right? We just know that news reactions tend to occur in the direction of the underlying trend. We know that. But that kind of stopped happening, at least in the big way that it had been happening around last summer. Tech stocks cruised off of the Q2 lows, right? The tariff bottom. Tech stocks led, big leaders. The first group to take out their prior highs, right? Break out of these little bases. We could show it. Throw up the chart, Spencer, right? First ones to break out of these cute little bases here. I'm talking about this right here, right? Here's tech. And we'll talk about software, Robert, right? Absolutely just slammed it off of the April lows. 40% back to those highs, breakaway gap, see it right here, right through them, right, runs to their first price target, right? You're gonna say, okay, where's the logical level for them to come in and start taking profits on what's been just an incredible performance for tech stocks, right? If you're thinking last year, right, well, where should we expect them to come in, maybe start taking profits in these things? Expect a little consolidation, corrective wave, right? Exactly where it started. Right, so we ran up and hit this target. This is the first Fibonacci extension, right around 144 in early October. And then look what happened. Look what happened. We said, oh, we're done for now. Tech said, right? Supply catches up with demand, profit taking ensues. At the same time, we had this beautiful market broadening. You guys are familiar with the story, right? Materials, big leader this year. Here's the year-to-date change, right? This is my sector table up here, top left, look on the top left. 16% year-to-date for materials, 10% for energy, 9% for industrials. So everybody's sitting here in their tech stocks up, 2.5%, saying, well, I'd rather be in these other things. So then the tech stocks, the biggest, best stocks in the market that everybody's used to always working, always leading, God forbid they don't for a quarter or two, right? And then people start using them as an ATM to buy silver, God knows what else, which is fine, right? There's room for both in a portfolio. The point is, this is just textbook. What a beautiful setup going into big tech earnings. Does it get better than this? Okay, let's take it back. Best stocks in the market off the April lows, big leaders, right? That literally, if I showed you the relative trend from April to September, October of last year, it looked exactly the same as the absolute trend, right? Pure alpha. These were the outperformers, as usual, leading off the market lows. So again, how many times have we seen that story? And then they're like, hey, in October, we need a breather. Market got a little messy. Remember, a lot of chop. We were figuring it out. That's when that broadening story really was born, right? Breath was bad, September, October. And then all of a sudden the value, the cyclical stuff started working. And now everybody's like, forget about big tech. Oh, it's over there. I got my materials and energy stocks now. I'm a value investor now. 2 bad quarters. This is exactly what you want, right? The bread and butter, the ultimate cheat code strategy to trade the waves in a bull market, we know, is to buy weakness within the context of broader strength. Buy corrective waves within the context of primary uptrends, right? Buy the consolidation phases within the context of bull markets. What I'm saying here is you buy the dip. You buy the dip. The best entries are off dips, right? Because the market doesn't move in a straight line higher in a bull market. I mean, I could find you some example. Here, this is a straight line higher. This is what the market doesn't do. Silver, crazy town. It's going to end so poorly. Just look out. I know a lot of you are in this trade. You can't help yourselves. Probably spending too much time on the internet. Look out. This doesn't happen, okay? What tends to happen is you get these beautiful little consolidation phases along the way that we can mark up and say, oh, what a textbook entry, the market just gave us here, right? You see this all the time. Little continuation patterns, we call them, right? And that's how you enter these trades. And then we just got a big one, the biggest one we've seen since this new bull market began, if you want to call it that, in Q2 of last year. Big sideways since really first week of October, XLK gone nowhere. And now look at this, breakout. This is a resolution day for XLK. And guess what? QQQ, it's the same. And the MAGs, it's very similar. We use the custom equal weighted index. It looks better. XLC, you're going to see something similar here, right? Meta, it's a big one. That's a big one. And then if you look under the hood, and I don't know what this comment about software just can't get up off the mat here. Yeah, it is. What software stocks are you in? Look, we sold the puts a little early in Microsoft. I was complaining last week at our conference. I was literally sitting at a lunch table, like looking at my account, like, and losing thousands of dollars every morning here in my short Microsoft puts. And so I did some things, like I got out to protect myself. I literally got back in the very next morning. I get shaken around sometimes. We all do, right? But these short puts have worked beautifully. Financed a lot of calls for me now. And it's not just Microsoft. That's a beautiful scoop and score. I think Microsoft has as much upside as anything. Yeah, they missed AI. Give me a break. This is Microsoft. It's like the single most badass company in the world. These guys almost never miss. Meta, talk about another one. Like, what a base here. If I could just clean it up so you could see this clearly. Wow, Meta, look at this, right? Really clean resistance zone here. If Meta's above 670, I think you're going to get a massive 675, massive move, right? But this is just the state of big cap tech right now. Avago, it's breaking down. It's breaking down, they said Friday, right? Oh my God. Sell your Broadcom. in the middle of a bull market when tech has already gone sideways for 4 months, I'm going to sell one of the best tech stocks out there because it looks like it might be a distribution pattern. That is a scoop and score. That is a failed top. You give the bears a chance, right? They shake them before they break them. You give the bears a chance. You see what they got. We're down here trading around 320 at the end of last week. Slam it. Complete that top. Let's see what the bears got. They got nothing. The worst stocks that are down on support zones are digging in and rebounding higher. You want to see an extreme example? Hey, Salesforce, a lot of volatility this morning in Salesforce. I'm pumped up today. Love earnings season. Big top. One of the best, premier software companies in the world. 230. What a level. Look out below, right? Had their chance. Same thing. Had their chance. Finish it. Knock this thing down. It's one of the weak ones. Software stinks. AI is eating software. Ask Jensen Huang, right? Is it though? Or are software stocks the best software stocks, which, by the way, it's the best business in the world, rewriting the rules on how companies can grow literally to infinity, keep increasing margins, right? We always thought this was fugazi. Companies can't do this at this size. Software taught us that, yeah, they could. These are special companies, and you get them at a 50% valuation, haircut here. All day. Give them to me. There's some spicy ones. The Trade Desk, right? Not looking so good. This one actually is breaking down, right? So you do have to pick your spots, but for the most part, look, Roper's another one. Yikes, breaking down in a big way. I mean, well advertised, right? So when thinking about all these, but you stick with the big boys right now. Adobe moving lower today too, about 3%, right? The big ones, though, that drive the XLK right now are driving it higher. Look at the last 5 candles in XLK after, by the way, and how beautiful is this? I was at our conference last week too, showing the pattern in the NASDAQ 100. And I had it drawn this way, I think. Did like a little something like that. And I was like, ooh, yikes. That's a textbook continuation pattern that for now is failing, but look out. Let's wait. You need a follow through candle, right? You need to confirm that bearish pattern resolution, right? So big move here, Tuesday of last week. You're like, oh, it's over for the NASDAQ. Then what happened? The NASDAQ 100 since that moment is now up almost 4%. Boom, 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 boom. 5 big up days. So what did they do? A little shakeout before the breakout. Love to see it. I want that every time. You don't always get what you want in life, but if I could, I want a little shakeout before every one of my breakouts. They don't write it up this good in the textbooks. Guys, this is one of those setups that I'm looking at. And I'm like, this is too good to be true. What is going on here? I'm talking to my friends last week, and they're like, yeah, I'm all international, small cap value. It's over for tech. No, it's not. What are you talking about? A lot of these stocks have been killed. The fundamentals haven't changed. This story, this narrative, oh, they missed AI? Stop it. When you hear that, run to that area and dive deeper, right? And look under figure out what's really going on. When you hear this, they missed AI, I get triggered, right? Microsoft missed AI. Did they? Remember when Google, not long ago, missed AI? So when they start telling you these Mag 7 stocks missed it, go take a look. Go take a good look and follow price at the end of the day, because one thing, the narratives change drastically and fast out here in this AI super cycle, whatever, tech revolution, right? Every new morning, depending on what you read, there's a new sexy story. You could believe it or you could not. Sometimes they lie to you. Sometimes they tell you the truth. Guess who never lies? Price. Follow the price, right? So something like Salesforce, fine, they want to kill it. Let them kill it. Let them kill it. But look at this. You got a major level right here. Look at the support zone. So what if we're wrong? How much money are you going to lose? Right? We're skewing the risk reward in our favor. And this one's trading to lows today while I'm trying to talk it up out here. Fine. Go buy one that's not. How about this momentum thrust from Microsoft? How often does a stock like Microsoft get oversold? It's very rare. Very rare. You saw it at the April lows. When you see it, you want to buy it, is my point. Probably didn't miss anything. A lot of opportunity here. I'm going to go to the chat. How are you guys doing? Are you as excited for this earnings season as me? Don't choke on it, Billy. I like snow. I like snow, Billy. And I got some sleeper picks for you guys. You want to get a little funky? Talk about a little software down the cap scale. Twilio, look out. Big base into another big base. We call it the base on base. You could have multiple bases. We're climbing up the right-hand side is the point here, and the upside is massive. Back to around 400 in the Twilio. Look, you see the VWAP from the prior cycle highs. Buyers are back in control. That's what I want to see for my primary trend trades. Okay. Zoom. Who remembers Zoom? They killed it. Zoom down 90% at its bear market lows. 90%. Who still uses Zoom? They do that thing where they cut you off after 40 minutes and nobody wants to pay them. Hilarious. Anyway, base on base. Couldn't write it up any better. They have some like Anthropic investment, right? Somebody wrote a note about yesterday. The market like gets all excited, runs the stock 10, 11% in a single day as if like people didn't know about this. Where are you? Market? That was a little weird the way that was priced in. Like, wasn't secret information. Anyway, I don't know. I guess Anthropic's doing an IPO or whatever. But they got like a nice little hidden asset on their balance sheet. Company like this probably gets bought out eventually. Does it run back all the way back to those COVID highs? Look, probably not. Probably, definitely not. However, you get halfway there and you make 100%, or a third of the way there, right? 200 gets you like a double here. Okay, so that's a good one too. Roku, again, don't know anybody who uses this anymore either. Joe, didn't you have a Roku when you were in college with the projector thing? A long time ago now. They're still around, still kicking it. Big reversal. So these are just some sleeper picks in the software space that I've been looking at when you move, down the cap scale out on the risk spectrum. Here's Snow. Snow looking good too. I think you buy this dip. All right. To the chat. Anthropic doing a lot of, I don't know anything about him, Dawson. Team, I got thoughts on Team P Guns. I bought it Monday. That was yesterday, right? Yep, I bought it. I'm in because I see something like this and I can't not. I bought Intuit also. I'm just going on down the line. Got stopped out of TTD. Got stopped out of Roper, right? But I'm just going on down the line. I'm treating these software stocks as innocent until proven guilty, especially if I got a big level to lean against like this one, C and Team. I'm just betting that this is not a massive, almost decade-long top. And what's been a, long-term, really good stock, right? Look at this run from 16 to 21. Really great. And Intuit's another one. Let's talk about. I love this. Look, they have such a moat. I get it. AI is going to do the taxes too. AI is going to do everything. Maybe, but if Intuit holds, call it 535, or if you want to get, give it a nice cushion here, 525, the pivot lows. I'm going to own Intuit. I think you could too. Done with the Biminer. I'm in calls. So, are they done? Let's see. Yeah. Hanging out. Look, this one, the fortunes for a Biminer investor could change fast. We've seen it. What was the one? Oh, we were in the Zoom calls, right? I was literally complaining last week. I'm like, this loser stock. We shouldn't have bought these calls. 4 days later, I'm eating my words. Stock surging, and we're selling a double. But options are wild like that. So Biminer, we're still in it. Am I hopeful that at this point that we're going to get paid on that trade? Probably not. But for now, you just stay away from the cryptos. Buy what's working. Another one that we did dabble in that I think is still actionable. Freebie for you guys for breakout multiplier members with Cypher. And it's still the same pattern that we bought. It's still right there. You could probably get it cheaper than we did. We went out, I think, a month and hit the 25 Delta calls. Yeah, Palantir. Same thing, Bernard. I feel the same way about Palantir. This thing's going to rip and run off the lows, probably at 200 soon. So here's NVIDIA. Here's Microsoft. Here's Apple digging in, right? Coming off those lows. Here's an AMD, right? Almost, looking about to break out above those October highs. So anyway, a lot of good stuff going on in tech. Don't give up on the software trade, guys. It's just too good. Like, look here. Do you want a broad industry group barometer to tell you whether you should press or stay away from this software theme that I know I've been obnoxious about and I'm going to continue to be? Right here, XSW, right? This is more of like an equal weight index. There couldn't be a clearer support level, call it 175, 176-ish. We're below there. The wind is not at our backs for this theme. We're above there. I think you keep taking shots, adding exposure, accumulating shares of some of these bigger software players for the long run. Wix is a wild one. I remember the Wix. This one comes. No, not for me. Now, the real spicy ones in software, I'm not quite ready for. Right? If we're going down the cap scale and out on the risk spectrum, I'll tell you. Like you can know. You don't even have to ask me about Wix. Right? They'll look like this. This is called a rounding bottom. Right? They'll look like the Zoom. Right? Okay. I need some sort of longer term reversal to get behind. I'm not. I'm not trying to catch a falling knife in some highly speculative stock. So Wix, hard no. INOD, we'll take a little request here. Yeah, there you go. That's a little bit better. I don't know if that's software. Is that software? I see tech, IT services. This is one of those. Is this one of those consulting companies? Nice, but you got a big base breakout here a couple of years back, and it's just running. Many targets have been hit. It's good to be back, the guy Golan. I get out of office anxiety. Have you heard of it? It's something I suffer from. Out of office anxiety. Uh-huh. I can't be away. If I'm away from here for more than like 2 market days, I'm a lot less fun to be around. I start having crazy thoughts. I start thinking my laptop is like plotting on me, right? Nothing ever works. I feel like when I travel, the Wi-Fi is always not so good. I just, yeah, I get really antsy. I'm like, it's time to go home. Okay. Casey moving. Don't forget China, but we don't have time for China today. Big cap tech. Don't miss this. I think there's huge opportunity here, huge trading opportunity. And I think over longer time frames, specifically in software, there's just deals. There's deals. I'm shopping the deals for the long run in software, and I'm trading these waves because these consolidations at the index level, so anything that looks like that, is a valid candidate, right, for a bullish vehicle, right? So I'm trading the waves, trading these continuation patterns, and then I'm buying the dips, hard dips, heavy long-term dips in these software names for the long-term portfolio. It's just the right thing to do right now. The herd is all like just loving value and cyclicals way too much. Things are a bit overheated there over short and intermediate term timeframes, right? So like I think we should zig while they're zagging or zag while they're zigging. I don't, want to would just basically go in a different direction from the herd right now, which is usually the right call. Yeah, Mexico's great. Mexico's great. We have a deep analyst team that doesn't miss anything in international markets. So there's a lot there. A big, it was a huge discussion point, kept coming up last week at our portfolio accelerator event, right? A lot of international opportunity. Yes, Mexico, monster base. It's a good one. It's a good one. And then there's the geopolitical stuff going on there right now. That the market's reacting positively to, which is always a good thing to see. Also, energy, I mean, really good, right? Continues to develop. I'm just trying to hit on all the major themes that we've kind of discussed here on the open bar in recent weeks. But energy, it looks like it's finally go time, guys. Big move from crude today, right? So everything, we're kind of like checking all those boxes slowly but surely. The relative trend too, turning for energy, right? Just talked about energy's up 10% this year. Tech's up 2.5. So a lot of stuff kind of going energy's way right now as that bullish thesis continues to come together more and more. Nagayama. If large cap tech gets going again, would that put the brakes on the XLE break? I'm not one of those people. I think big tech can go up. At the same time, energy goes up. At the same time, bonds go up. Or vice versa, the other way around, bonds go down and interest rates go up. I'm not overthinking that. It depends on the bond market is a pain in the ass because you have to ask yourself, okay, are interest rates moving on reflation concerns? Are they moving on like long-term growth forecasts? Are they moving on this crazy stuff that's going on with the Fed and Jerome Powell? Or is he going to cut? Is he not? Are we getting a new guy? Are we not? Is there geopolitical stuff, right? You got to figure out what's driving interest rates, and it's usually just two that you have to pick between. Is this inflation doing this, or is it growth expectations doing this, right? So, and I'm not smart enough. I'm not some bond market vigilante. I'm not your guy for that. But what I do know is that relationships dislocate and simply change over time. And we've seen it both ways. Where, oh, interest rates up is good. And then, oh, interest rates down is good. So just we got to watch that regime. We got to watch those intermarket relationships. We do, but I stay open-minded. I can envision a world that I would like a lot, where energy and tech stocks enjoy higher prices and uptrends together at the same time. And it's not crazy to think that. Open up your mind. It's not hard to see how Chevron and Exxon get going because they're already going. Exxon's going. Exxon right now, if you look at the chart, it's telling you I'm going. We're going higher, is what Exxon is saying. Sometimes don't ask why. Just get on for the ride. You'll find out why later. Smart people will come up with really good reasons with hindsight. Always smart people out there coming out and telling you why something that already happened happened. Usually a good time to turn off the TV because it doesn't fucking matter for our money tomorrow. Seriously. Sounding smart is cool. Making money is cooler. That's what we talk about here. Yeah, but you know, I have strong opinions about that, Nagayama, but that's the right way to think about it. Let the market decide, right? Ride those waves with it, and then we find out all these things. And we find out, oh, the relationship actually ended up being this. Oh, this big relationship that we got so used to for several years, because these two things were doing the same thing, and now they're doing different things. It changed right there at that moment, and I didn't buy this thing because I was banking on that relationship continuing. Trust me, I've gotten caught up in that. A good book that can keep you on the right side is right here. This is one of my desk books. I don't have many desk books. I keep my Jeff Hirsch almanac. I keep my Edwards and McGee. I keep my Brian Shannon. I keep my Steve Nissan because I'm a freak for the candlesticks. But this is John Murphy, Intermarket Analysis. This is just a really good one for that. He'll teach you how to overthink intermarket analysis so that you don't have to. Right? He'll teach you about the differences based on if we're in an inflationary, deflationary, reflationary, whatever inflationary, stagflationary regime, what you should expect from these different assets or asset classes and the relationships between them. All right, we're going to hit the chat and we're going to get out of here because we have trades to make. And again, I feel so strongly about this big tech trade right now. If you did get one of these, risk-free trials to the beat report, just make sure that you got that email. Make sure that you got that email. I want everybody to get in this trade, and it's like actionable now. I think you got to move on it. You don't want to wait. But I think we got a multi-bagger here. I think we do. I have so much conviction about this trade right now. Devin, big base. Yep. Is it time? I don't know. Is it tail two? No. Software so out of favor, just how we like it, Michael Anthony. Yeah, don't get me pumped up today. You wait, did you put enough U's in there? Are you talking about the triple U, the quad U? You're talking about the U. What was that hip hop song? Oh, is that Biz Markie? Who remembers that? Am I dating myself? Unity, another one. That report is coming out soon. I'll just tell you right now, we're adding that one to our model portfolio. Unity, like in the coming days. Love the base in Unity. You got me, and I can't lie, Bart. I can't lie. Ooh, not if it's doing that though, right? We're waiting for a trigger here. How do we do this? You guys know how we do this, right? We're not just going to come and buy something. I love the fundamental story here in the Unity. This one's like just like AppLovin, but like they say, not as good. What if it ends up being more like AppLovin in the future? That's like where my head is at. Oh, this is AppLovin's competitor? Well, it doesn't look the same. Why not? What does it have to do to look more like AppLovin? That's the bullish story with Unity. It's not always crazy complicated, but we'll be buying it on a trigger here. Call it 45, right? See a little VWAP. We gotta get above there. Don't love the action today, but look, they've been shaking them around. The market is figuring something out. So it's like turning point volatility, right? Because you're getting big moves in both directions in a lot of these softwares right now, right? The market's trying to figure something out. When volatility spikes in both directions, pay attention, right? We're picking a direction, usually that means. Hello. Yeah. Okay. CoreWeave. Yep. NVIDIA just what? Extra $2 billion investment there. Cool. The money that can come out of metals go into energy. The money that can come out of metals and go into a lot of places. But really, from a fund flow perspective, you know that money is earmarked for treasuries. Like the money that's poured into metals, to be super clear, that's treasuries. That's treasury money. Okay. What's really going on there is the central bank buying, right? They have more or less two options, except for the crazy countries like El Salvador buying Bitcoin and shit. But most central banks, most serious central banks have two options, which is I'm going to buy U.S. treasuries or other foreign bank treasuries, Japan, whatever, or we'll buy gold. And a lot of central banks around the world are like, you America, and they're buying gold and silver. So that money, when it pours out of gold and silver, then you want to look at TLT. Right? When you start seeing big down days in the precious metals, I think those flows go right back into US treasuries. It's kind of funny what's going on there. Like a lot of people are acting like this is sticky money that's just going to hang out in gold and silver forever. We'll see. It's going back to the US treasury market. Netflix, I don't know. I'm not too interested in the Netflix. That's a nasty looking top in Netflix, is the truth right now. Out of office anxiety, that's really bad. You get it too, Rachel? Yeah, nope. Cameco couldn't be any more different from software, but yep. Big fan of uranium. I'm on board with the mega trend in uranium. We've been there. We like it. Probably has legs. Just going down, making sure I'm not missing anything good here. Intuit, I mean, seriously, Dylan, seriously, you said it. How good is QuickBooks? I mean, come on. I remember a time in my life, I was a QuickBooks ninja, just hanging out in QuickBooks and Excel all day. So I can tell you from experience, really good stuff over at Intuit. Really good stuff, like quality products. What about MU? Have you not made enough money in Micron? Look, I mean, this is why we love these bases. Another one that we talked about last week, right? I mean, let's just look at a monthly. When you see a .com bubble base like this, what do? You buy it, and you buy it with patience, right? And expect a little bit of this, right? Because we went and then we failed, and then we were like down here at like 90, $70. Analysts hated Micron. They're like, oh, nothing good here. Too much China exposure. Memory sucks. And then from 70 to 400, up 500% in what, less than a year? So that's why this is the single best pattern for longest time frames. So yeah, Micron's great, but like pay yourself. Where you think it's gonna quadruple again from here? Probably not. But you could take that money and put it into something else that has a better chance to. Okay, so we do here. Done with the. What about toast? Look, I'm high hopes for the toast, but like we got to see it, man. What is this? No. Look, this is one of those you could look at and be like, is that a failed top coming out of a big base, right? So I don't hate it. Like if you told me I'm buying this here against this level, I say, yeah, fine. I'm in toast off of this trend reversal, right? So I'm letting it dance, big cushion, long-term position. I get it, that, industry leader in the restaurant software stuff, one-stop shopping. It's a great fundamental story. Price has got to confirm. Price has got to confirm. But this would be a name that we would look at if we start to see, the technicals confirming. Do I still like Baba? No. I love it. It might be my single largest position right now. We got exercise on some calls, and then I got to add that to the common stock exposure. But Baidu and Baba, they move around. But two of my top 5 holdings now for a while since last year, and I don't see that changing anytime soon. If they keep putting up and keep performing, I'm not going anywhere. Over longer time frames, I'm hanging out. We're trading the waves too. Traded the calls successfully in both of these names recently, gotten some really nice pops, right? We looked at Baidu and we said, we got this pop, coming into the year. Nice move out of this consolidation, right? We'll draw it up something like this. We literally looked at the Baidu and said, or no, we looked at the Baidu, then we looked at the Baba and we said, well, the Baidu take profits in now because we got the pop that we were waiting for. And then let's plow that into the Baba and make the bet that the Baba is going to look more like the Baidu in the future. And then that happened. So we made money on both. So we'll keep trading the waves, but like these are great primary trend investments too. Dawson has 7 Rokus. Well, there you go. That Dawson is single-handedly reversing trend for this business. That's a lot of Rokus. That's a lot of TVs in general. I'm a big TV guy. I don't even have that many. We talked about the team. We talked about the Rambus. That's a big Kenny stock. Go to Kenny for the deets on the Rambus. Okay, I trust Kenny when it comes to the Rambus. Yeah, let's get funky. Let's get weird. Okay, cool. So long, Amazon. Billy, always funny. Always funny. Bernstein, don't care. Bill with no fill. Oof. Yeah. Look, we were looking at it, Bill, when it was 225, 235. And then this is the first time we ever sent an email to the Beat Report paid list. And we're sitting there docking it up, like doing tech things. Who has time for? And like 5 minutes go by and it moves from 225 to 235 to like 250. And I'm like, God damn it, just fire it. We should have adjusted the won't pay more than price to like 285, maybe. But I mean, the bottom line is you don't want to chase on these trades. You know, if you miss it, you miss it. There will be more. Let them come to you. There's different things we could do. We'll help you out with that. We'll help you out with that. Stephen Lippold with a very cold take, but that's okay. We'll see. We'll see. And that's what makes a market, right? We respect your bearish views. It's what makes a market. I'll buy your tech stocks. People get so sure about things sometimes. I don't know what tech's going to do. I think they're going higher. I'm long as hell. Uh-huh. If only the banks did a lot of things. Incredibly caffeinated this morning. It's the Cuban stuff, really. You gotta be careful with the Cuban stuff. Okay. No medals, just tech requests. Yeah. No medals today. Taking a break on the medals. Let them have it, right? Let the novices go chase medals. We're on to the next big thing here. And it's big tech. Caleb, miss you, dog. Yeah, 10 is the time, Andrew. 10 is the time we're going to do this from now on. NVIDIA is trying. Is it? Great. Microsoft looks so good. Just firing off these lows. Yeah, the tape. CVS, big bummer there. It's okay. All right, guys. This will do it. This will do it. This was a good one. Yeah, Todd, let me know about golf this weekend, dog. All right. Japan bonds. Yeah, I know. You're hearing a lot about that. Hearing a lot about that. All right, we're good. Guys, thank you so much for joining me. As always, making the open bar what it is. I love the show. It's so much fun coming on here, talking through the market action, kind of what I'm seeing, what I'm trading, what you guys are seeing, and what you want to talk about. Taking ticker requests, talking through these themes. Like I said, big week. A lot of stuff is going to move. Right? You tend to get resolution style price action during these, big earnings weeks, and we're there, right? So big tech underway. We're going to get some answers, right? We have some really nice consolidations, some really nice patterns in place here. I think you're going to see them resolve, in both directions, maybe. But I'm leaning higher in almost every single one of them, right? Just leaning, and we've sold the puts, got burnt on some of them being too early, went back to them, kept selling the puts, used that to finance some calls. So like we got some exposure. We'll add more. You'll see it. Members will get these trades, both beat report and breakout multiplier. They'll probably be similar but different. But we're just going to trade these waves through earnings. And I haven't been this excited about the mega cap growth space in a long time. I think the setup is really prime for a move higher. All right, everybody. Thank you so much. We'll see you next Tuesday on the open bar.